runs. I'm going to select a cultivar. I'm just going to select one because it's in the southeast corner of the state. You can select your planting date. A lot of farmers told me they planted on Memorial Day, so I'm just going to select Memorial Day, and you'll get this tool. So from planting date to the current, which is the red line, is what has actually occurred. That green line is the estimated maturity of that particular soybean cultivar, and then those other lines are the frost, freeze, and hard freeze dates on the end. So this cultivar, in theory, would be done before the first frost. You'll notice I scrolled over the soybean growing degree days, and then here is the actual data, and then beginning from now forward, everything else is estimated based on the current averages for that particular spot on the planet. So if you've never used this tool, it gives you kind of a hint of how you're going in the growing season. You know, this year it's been pretty warm, so most, I think, even the soybeans that are behind schedule will likely be able to catch up and mature before our average first frost or freeze this year. But I did very quickly, before I get into the weather, want to talk to everyone about our soybean tool that we have on the Ndvi website. You can get to our Ndvi website by just going to ndvi.org is the fastest way to get there. Now you'll notice on this screen it says departure from 2019 corn accumulated GDDs, but I will remind you that both corn and soybeans use base 50 degrees Fahrenheit, or about 10 degrees Celsius, as the base number, so the data is about the same. This is just how much warmer we've been this year than we were last year. Now, a lot of people talk to me about how cold 2019 was, and most of the growing season actually, contrary to myth, really wasn't that bad. A lot of spots still finished close to average. Some locations were indeed 1 or 2 degrees below the norm. But this year to last year, you'll notice in the southeastern part of North Dakota in particular, we're getting 100, 125 more growing degree days than last year. And again, you know, last year for a few spots, it wasn't the warmest of growing seasons. But even if I go back and take you back to the last 5 years average, and again, all the NAs on the map are sites that weren't around 5 years ago, but you will notice we're still running 50 to 100, some areas over 100 growing degrees more than the average for the past 5 years. So again, this year, unlike some years in the past and some areas last year, we're definitely getting the heat units that we need this year. And I do believe that will continue to be the case for the upcoming growing season. Just from June 1st, and June 1st is the beginning of climatological summer. So when you hear summer forecast, people talking about the summer and weather or climate circles, we're always talking June, July, and August, the 3 warmest months of the year. And again, a vast majority of the North Dakota Agricultural Weather Network running anywhere from 2 to 4 degrees, even a few spots at 5 degrees above average. So it's been very, very warm this year. Probably the warmest year we had in a while. The one thing about this year that, of course, has been somewhat unique is precipitation. This is Bismarck. So if you look at this, notice it says Bismarck. And I just wanted to show you this mainly because through June 26th, so June 26th is the end of this chart right here, you will notice this red line on the bottom is the driest year on record through June 26th. And guess what year it was? This year. So this year, through June 26th in Bismarck, the center of North Dakota, was drier than, say, the famed year of 1936, the famed year of 1988, some very severe drought years, through June 26th. You'll notice Fargo wasn't the driest on record, but Fargo, for instance, through June 26th was in the top 20 driest years on record. I'll be the first one to admit that if you caught me last winter at one of my presentations, I had said that I really think that 2020 could be very similar to 2017, a dry summer in most locations. So at the end of June, I had a lot of people come to me and say, boy, Daryl, your forecast for this summer is spot on. And as I always tell people when they say that stuff to me, the summer's not done yet. And I actually was interviewed by a newspaper that said that this rain that's coming up towards the very end of June, the last couple of days from June, might be a crop saver. Well, we all know, if you're familiar with North Dakota, that this is the end of June again. You know how far below average we were. Most areas were 2 to 4 inches of rain below average. This was the percent of average once we were getting towards the end of June. But then the last 2 days of June and July occurred and very quickly, all things changed. So we went from June being most of the plain states from Texas all the way to North Dakota was quite dry. One huge exception was far northwestern Minnesota. Kitson County got a huge thunderstorm complex at the beginning of June that really flooded that area and did a lot of bad news for the farmers up there that were looking for rain to that point, but then at the end ended up getting too much in a hurry. But this then is the percent of normal rainfall in July. And you notice much of eastern North Dakota, anywhere from 150 to 200% of normal, which really means excess rain of about 2 to 3 inches of rain. So very, very quickly, our pattern shift from dry in most areas to wet in most areas. But you'll notice in July, there's still arid pockets where it still hasn't rained. So if you've gotten a lot of rain, you're not alone, but if you're dry, you're also, not alone in many ways. But here's the thing, May and June was very, very dry. July was very, very wet. So if we go back to May 1st, kind of the traditional beginning of the growing season, although this year, most of it, the growing season didn't get started in North Dakota till the middle of May because the first 10 days were so cold. But you'll notice most areas are just a little bit above average. Still, much of the state of North Dakota is still below average. So we really have the difference here, two different worlds. We have some areas that are excessively wet, and we have some areas that are excessively dry. And in typical Northern Plains standards, not a lot of areas in a given year are about where you need to go. So what happened? I know these types of charts can confuse you if you're not a meteorologist, but think of these black lines as the upper level wind. So here's the upper level wind, just flows right between these lines. And so you notice across the Northern Plains in particular, our flow in May and June was really from the Northwest during this time period. So that map right there was in early June when our flow was in that direction. And this is what happened in July. We had this very persistent area of low pressure aloft in the Northern Rockies, Montana into the Canadian Rockies. And if you recall, there's actually some very late season snowfalls in Montana and the Rocky Mountains. It was very low elevations for that late into June and early July, even around Independence Day. And so this pattern, if you look at the upper level wind flow, again, where is the wind blowing between these black lines? It's blowing from the southwest. And pretty much 100% of the time, when the Northern Plains is wet, it's because the wind blows from the southwest aloft. And this would be about 15, 20,000 feet above the surface. Well, what has happened since then is now that we're at the end of July, and I think this will continue for the next couple of weeks, you notice we're back to this northwest flow. And instead of an area of low pressure in the Northern Rockies, you notice this is actually, you could call it high pressure. And so we're getting this northwest flow. Will we get zero precipitation? Probably not, but I really think here in the short term, this really started on Sunday, that will go 10 to 14 days where most of us will probably see very little precipitation. For instance, Friday, there's going to be some thunderstorms Friday night. You get underneath the core of one of those thunderstorms, you might be the exception, but I have a feeling that most areas will not get a lot of precipitation. If you've ever seen any of my talks in the past, I usually will show you sea surface temperature anomalies. And again, these are anomalies. So this big blob right here, if you fell off a boat, the ocean temperature there is still only in the 50s. You're going to get hypothermia. I'm just above average. But you notice off the West Coast, this was cooler. And I want you in particular to watch this area in the Pacific Ocean. That little rectangle I made is where, when you hear the phrase El Nino or La Nina, is where they're actually occurring. And I'm going to run you a loop here. And this loop will take you from April into just a couple of days ago. And you notice what happened is the equatorial Pacific went from reddish, above average temperatures, to blue and purples, which is below average temperature. So you may have heard that there is a La Nina, and that's the cold cousin of El Nino in the tropical areas of the Pacific Ocean. If this continues into the fall and winter, which I do believe it will, probably be a weak one, that would bode for perhaps a colder than average winter, not necessarily a snowy one, because everyone thinks La Ninas are cold and snowy, but historically that's not the case. Usually if it is one or the other, they tend to lean on the cold side. But this ocean pattern right now that we're in is very, very similar to 2017, which was really our last drought year in many areas. But in turn, we had that switchover that I explained to you that occurred in July. Now, if we take a look at past years that were very similar to this year, both oceanically and atmospherically, so taking the past and then looking at, okay, if this occurred in the past, why would it not occur currently? And these are referred to as analogs because they're similar years in the past. And I mix up, this is a mix of 4 years. And you notice for autumn, it has the northern plains warmer than average, but I will give you a look about by 1 degree. I would not be surprised if this analog package is wrong. I would not be surprised if Western North Dakota, matter of fact, I'm going to change the color, that this area to me might end up being average or even colder than average, although my analog package says the exact opposite. But really what I'm thinking is August will be above average, at least as we get into September. So I know a lot of soybeans are behind schedule. I really think they're going to catch up and we're going to get a mature unless we get a very, very early frost. And as I always remind people, it only takes 1 morning, but I think the temperature is not going to be an issue. What's probably going to be an issue, if there is anything, which is usually the case, will be precipitation. Now, this is the analog package for this fall, especially September and October. And you notice drier than average, but just barely, a little bit below average. But the thing is, I always remind people in my precipitation analog sets, it only takes 1 storm. I wouldn't be surprised if the summer is below average, except for 3 weeks. And guess what? The past 3 weeks, many areas got a whole summer's worth of rain with 1 minor, really pattern switch, you could call it. So precipitation forecasts are always really, really difficult because it is much easier to get wet in many ways than it is to stay dry, because especially here in the northern plains, we're a dry climate. And we only average about 2.5 inches, 2.5 inches during the entire month of August. Guess what? That's 1 thunderstorm. So that's why I always put a little grain of salt with the precipitation forecast. But this is my analog package through the autumn. Going forward, I would think most areas will be hopefully at least average precipitation or below, but I can pretty much guarantee you that there's going to be some wet areas. Now, if you believe computer models, which I don't, by the way, but if you believe computer models, this is the European model. It's the European Center for Mid-Range Weather Forecasting, if you're ever curious what ECMWF stands for. But this is, I think, very arguably the best computer model on the planet. And this is for the next 45 days. This is, they run these 2 times a week. This was just released Tuesday morning. And you'll notice, you know, even though my analog set, you notice these always these little blobs in forecasting, mainly because, again, 1 thunderstorm, but it generally has the area dry or a few areas a little bit above average, but overall, I would call that near average or a little bit below. So those are, you know, my analog sets. This is some computer guidance going forward. I think some of these blue streaks in here could very well be hurricanes, by the way, because this hurricane season will probably be pretty active going forward. So really to sum up, what I'm saying is I think temperatures will remain average or above, at least through September. I'm quite confident in my temperature forecast. I think the soybeans, again, other crops that were planted a little bit late will catch up. Last year, a lot of things just did not quite get to maturity because it was not warm enough in some areas, especially as we went into the autumn with all the rain then in turn that we had. But I think this year, temperature is not going to be a factor. It's the rain that's the concern. I think the rain, of course, as always, will be variable, but I'm leaning right now with all my analog packages. There's some years that are so similar to this year that I just hope that this ends up being right, that more average to below than there will be actually wet areas. But I can almost guarantee you, as always the case, there's going to be some pockets of wet, but I have a lower confidence in my rain forecast. So I don't know if some people have been chatting, sending me some questions, but I will be open to any questions before I end today if anyone had any.
Thanks, Daryl. I'm keeping an eye on the Q&A tool. I don't see any right now. So if anyone has any questions for Daryl, go ahead and enter those.
And plus, if anyone had any questions or wanted to chat with me, there's my email address is on the screen, or you can find me on Twitter at Daryl Richardson. It's a rare day that I don't usually have these 10 or 15 phone calls or emails. So never be afraid to give me a call. Always willing to help, of course.
All right. Thanks, Daryl. With that, Frayne, if you are ready, we have Dr. Frayne Olson. He's going to start with a fundamental outlook for the 2020 soybean market. So same story here. If you have any questions, go ahead and use that Q&A tool. Chat us if you have any issues. And with that, Frayne, I'll have you get started.
All right, very good. Give me just a minute here to share my screen and we will get started. Oop, get to the very top here. Like that. I'll minimize that, kind of move it up out of the way. Okay, can everybody see that? Jenna, could just give me a quick nod that we're doing okay on seeing my PowerPoint.
Yep, I see it.
Perfect.
You're good.
All right, so I thanks Daryl for kind of setting this up. Daryl does a really nice job of looking at what's happening within our region and giving a perspective on the forecast for the Northern Plains. And that's critically important for you as farmers and farm managers as we move forward in planning. I am going to make a couple comments. I am not a weatherman. I'm not trying to be the weatherman, but there's a couple comments that I'm going to make about how the markets are viewing the weather and the weather forecast as well. So I've got my program or my session here broken up into about 3 or 4 different parts. I'm going to start with a little bit of current thought, and right now, of course, everybody is watching the weather. We're getting updates on kind of crop development and what our yield expectations might be. Then I'm going to move into some supply-demand conditions, primarily looking at some of the demand issues. I'll make a few comments about the Phase 1 trade agreement and kind of where we stand so far, and at least our ability to track what's going on. And then I'm going to kind of wrap up with some thoughts and some observations, I guess, on COVID-19 and the implications for the soybean market as we move forward. And we'll take a small break. I'll need to switch things over a little bit, and then we'll start into the technical analysis where I'll go through some of the charting and we can talk a little bit about some marketing strategies. So I'll be taking some breaks periodically throughout this. So if you do have questions, again, please be sure to use the chat function and we'll try and get those answered. So I'm going to start with the production update. And again, right now we have a better idea of what the planted acreage is. Everybody's right now focused on what the yield and yield potential is. So when we talk about what's happening primarily in the futures market, which again is going to set the base price, I will make some comments about basis. I know tomorrow Dr. Wilson is going to talk a lot about basis and basis movement and what we might see this year versus other years. But the futures market is really much more concerned about total supply and total demand. It's really a very big, large picture. The cash market's the one that's most concerned about making sure the grain is in the right place at the right time. So let's think about this as a very high level outlook on soybean and soybean production. And I want to give just some reference points to remind everybody about where are the core growing regions for soybeans. So this is a map that USDA created. Again, this is an average production. So we're looking at total bushels produced, or in this case, tons. They converted it to metric ton, produced by county. And again, the darker the green, the more bushels are produced. The lighter the green and the pale yellows, there's soybean production, but the soybean production bushel-wise doesn't count as much. So we really are focused on kind of this, the Midwest and Northern Plains now as the core soybean producing region. As you can see, I'll use my cursor here. As you can see, we do have in the Mississippi River Valley, we have quite a few soybeans that are right along Mississippi River. But those core corn and soybean producing states, Iowa, Illinois, and then we get to the western corn belt of Nebraska and Minnesota. So those 4 states, Iowa, Illinois, Nebraska, Minnesota, make up a very large portion of both corn and soybean production. When we talk about the I states, we include obviously Indiana. Sometimes we include Ohio, which are important. But if you notice also the Dakotas, again, as we get into the Northern Plains, South Dakota, North Dakota, have expanded acreage in the last several years. And again, as we're looking forward and what our market analysts and what are the market traders really focused on, it's really in this Midwest, eastern, western Corn Belt region that we're focused on, and including southern Minnesota. So again, as a reference point, as we talk about weather and yield potential, one of the concerns I have is we all get trapped in this backyard syndrome. Whatever's happening in my backyard or whatever's happening in my region or my area of the world, that's got to be what's happening every place else. And that's not necessarily the case. So we did get weekly updates from USDA and crop progress reports. I want to emphasize that the crop progress reports are subjective views, subjective analysis of what the crop condition looks like. Typically, the people that are reporting this are county agents. Sometimes they're county FSA officials that will travel around, and they'll do the reports every week. They'll submit those into Washington, D.C. It gets compiled for a statewide average as well as a national average. And again, these crop progress reports are used as a proxy by a lot of traders. Whether you agree with the numbers or disagree with the numbers is kind of irrelevant. This is information that the market tries to evaluate to get a sense or an idea of what's happening to the crop condition. And in my view, the most important way to think about these is, what is the change from week to week? Is the crop improving? Is it getting better? Or is the crop suffering and we're having some problems? And again, it does give a state-by-state breakdown, but it is a subjective assessment. So what is the if you're going to rate the crop good or if you're going to rate the crop excellent, again, this gets to be a bit subjective. The point in bringing this up is this year in particular, as we look at those core Corn Belt states, the Illinois, Iowa, Minnesota, Nebraska, the good to excellent conditions are actually very, very strong. They're not a record large, but they're definitely much better than last year. And obviously last year we had a lot of delayed planting, especially in Illinois, Indiana, and Ohio. Again, the crop was planted very late. Crop conditions suffered throughout the summer months, and again, the markets tried to recognize that. But as we look at this year's numbers, we look at, again, this would be for July 27th, which is Monday when it came out. There's about 72% of the soybeans are rated good to excellent. The previous month, previous week, was actually an increase, and a pretty substantial increase over what we saw the previous year. And again, when we look at these particular states for Illinois, Iowa, Minnesota, and Nebraska, crop conditions are rated very, very good. And again, Nebraska, if you're looking at, there's almost 80% that's in that good to excellent rating. Okay. The other thing that we have to remember is, even though we got our planting was, depending on where you are in the state, planting for North Dakota soybeans was a little bit delayed this year. It wasn't as bad as last year, but we're still not quite as planting progress wasn't quite as good as we had hoped. That isn't the case when we look into those core Corn Belts again, Corn Belt states. So this is, again, this weekly crop progress report. This is what % of the crop is setting pods. So again, an indication of how fast is the crop developing. And this is the information, this July 26, 2020, that's the information that we got this week. This column right here is for July 19th, that was last week. And then this is for July 26th, essentially the same week last year. So again, knowing last year we were very slow in our crop development. This year, again, we can look at what the 5-year average is. This is the 2015 to 19 average for this time of year, for this week in their growing season. So in Iowa, in Minnesota, as well as Nebraska, the soybean development is actually way ahead. So we're looking at about 50, a little over 50% of the soybeans in Iowa, Minnesota, Nebraska have already started setting pod. Versus last year, we're looking at, mid-20s. So again, the crop was very delayed. So coming back to some of Daryl's comments about, will we get a potential weather rally later on in the season, in particular a frost threat? I think based on these numbers, the probability is relatively low that we're going to have a big rally because of a frost issue, at least in those core growing states. Up here in North Dakota, again, hopefully we don't have that. So again, I want to put things in perspective. This is information that, again, the market traders and analysts are looking at to try and set their view and their expectation of what might be coming as we move forward through the growing season. This is also something that I like to follow. Again, USDA does this. This is satellite imagery. This is Ndvi, which is the vegetative index. Again, it's a proxy. It's an indicator that we can use to say what areas of the growing region might be having some problems versus what areas might be having some larger crop expectations. Now, this is updated every 2 weeks. I do expect in the next day or two these model runs will be updated. This is the most recent information we have. So this is a vegetative index. They're taking satellite imagery. They're looking at how green is the crop. Okay, so what is and they're using that color of the crop as an indicator or a proxy for the crop health. And what this shows is this has been filtered to focus only on the major crops that we grow. So we've taken out the pasture land. We've taken out all the forest areas. So this would be considered cropland, and we're looking at the condition of the crop now relative to average, and the average is about a 20-year average. So again, using the satellite imagery, USDA has been doing this for quite a long time. So we have this reference point, this historical reference point. Again, I want to focus primarily on this western corn belt. When you look at Iowa, Nebraska, parts of South Dakota, as well as Minnesota, and Kansas as well. Again, this would be all crops, not just soybeans. So it would include corn and wheat. Thus, the reason you're starting to see some of the browns show up for the winter wheat area. But when we look at the major corn belt, Illinois has had some challenges. Again, there was a lot of wet ground, not only last summer, but also into the fall. And some of those fields were planted a little bit later than normal. So if you're looking at something in the green category, white is considered neutral or average. If it's green, it would be slightly above average. Again, looking at the darker greens, it's looking at this much better than normal. As we look towards these browns and then into the reds, those are below average. So it's not to say that we're not going to have a good crop. It's just not as strong as it has been historically. So there are some kind of questions. You may have heard some things showing up on social media that there's places in Illinois, potentially Indiana and Ohio that are starting to have some challenges now because of the drier conditions. But again, when we look at these big corn and soybean producing states of Iowa, again, Nebraska and parts of southern Minnesota, those are in relatively good shape right now. Again, I'm not the weatherman, but I do want to try and provide some information that some of the, again, traders and analysts are looking at. This is some new information NASA has put out, again, using some satellite imagery, trying to estimate what is the soil moisture conditions. So if we were to run into a stretch of drier weather, or if we started having some additional heat, you know, what is the potential for damage to the crop and crop yield potential? And again, this is based on percentiles. So if it's in the white region, it would be in the middle. So this would be considered to be average. As you get into the blues, in particular the darker blues, you're looking at the higher rates, or you know, they're looking at what would be a higher range of normal. And again, when we see the yellows and the browns and the reds, you're below normal or below average. This is for what's considered the soil root zone, or this would be the root zone, about the top meter of soil, or about the top 3 feet. Again, as we get later in the growing season, especially for corn, some of those roots can go down deep enough to be able to capture some of that water. As we can see on this, again, most of Iowa and Illinois have good soil moisture conditions. Wisconsin is, if anything, a little bit on the wet side. But even as we look into southern Nebraska, parts of Kansas, again, very good soil moisture conditions going in. So if we did have a short period of heat and dryness, the expectation, at least right now, for forming what we think will happen to yields and yield potential is looking pretty favorable. This is from National Weather Service. Again, these are, it's not as detailed a forecast as what Daryl just gave us. Again, really focusing on what's happening here in North Dakota. But this is information, and you hear in a lot of the market reports, some of the analysts are looking at this National Weather Service. And again, it's very easily accessible information, and so they're using this information to form their opinions and expectations of what they think will happen. On the precipitation point, and again, this is the 8 to 14 day forecast. We're looking about 2 weeks forward. As you can see, most of that Corn Belt region is looking at either slightly above average or normal precipitation, at least the probability for precip. When we look at the temperature forecast, it's normal to slightly below normal. And again, just as a reference point, I several years ago went back, got my PhD at University of Missouri, so I know what the summer is like in, August in Missouri is a pretty hot and unbearable time. In southern, I spent some time at Iowa State. Central Iowa is about the same thing. So summer in Iowa and in August in particular in Iowa and Missouri get to be pretty hot and sticky. And so if to have below normal temperatures is actually very favorable for crop development because it's not going to put as much stress on it again. So I'm not trying to be the weather forecaster, but I am trying to give you the information that a lot of the traders and analysts are looking at as they try and form their expectations about yield and yield forecasts. So I want to take just a short break here. If there are any questions, please, Jenna, make sure that if there's something that's appeared in the chat that I have a chance to try and answer that before I move on.
I don't see anything right now, Frayne.
All right.
But I'll keep an eye on that. Do you want to take a break for people to refresh coffee cups and?
Yep, we can certainly do that. We can certainly do that. I think that would be appropriate. So let's take a couple minute break here. Grab yourself some extra coffee and hit the restroom if you need to, obviously. So we'll take a short break here. Jenna, what, about 3 or 4 minutes?
Yeah, let's start back. It's 8:42 on my 8:43 on my clock here. So let's start back at about 8:50.
Perfect.
All right.
Hey, Frayne, are you listening?
Yes, I am.
Daryl Richardson here. If you didn't know. Hey, that one graphic you had with Ndvi?
Yep.
Crop index had a lot of southeastern North Dakota kind of in tough shape.
Yep.
I'm sure you're aware of that area. A lot of that is, I don't think their algorithms got the no plant very well because all the corn that was harvested in that area in June, I think it picked it up as dead or dry croppage, which when it was still corn that needed to be harvested, and then there's a lot of just no plant in that area.
Yep. No, and that's again, given the time frame that they do this, that would be correct. That again, all they're doing is taking the satellite imagery. They're looking at the color of the crop, and they're using that. So obviously, if it was corn from last year, it's going to show up as brown.
Yeah.
Unharvested corn. And again, those areas that might be, I know there's some areas that are even on soybeans having some chlorosis problems. So again, that would show up as more of a yellow instead of the dark green. Yep. So I agree with that, Daryl, a lot, that there's going to be some of those areas showing up.
If you look at high-res orbital satellite imagery, even as soon as I did this again yesterday, in fact, you will just see there are just thousands of acres sitting out there just black.
Right.
On there. So anyway, anyone that's still listening, I didn't want to interrupt you while you were talking, but I've been asked that question. A couple of people had seen that, and I said, well, you have to remember the stuff that you mentioned, and you're correct about soybeans. We're pretty yellow in spots this spring too.
Right. So let me double check that let me share my screen again really quickly to reference what Daryl's talking about. It was this slide right here.
Yeah.
And this region in the southeast North Dakota, and again, I would agree with that, Daryl. A lot of that is either going to be prevent plant, or it's going to be some of those unharvested corn acres that are still out in the field that have been, that's not showing up as that green reflectivity that they usually try and capture.
Yeah. And plus, especially out in Stutsman County, parts of Lemoore, Logan County, in that area, they were phenomenally dry and still are running well below average on precip. I did get some good rains here in the last 10 days, but that also was that July 11th through 18th period, a lot of that area is still pretty dry out there too. So I think it was a combination of all three of them.
Yeah, and again, just as for everybody's reference, you know, this brown down here, and as you get into Texas Panhandle and Oklahoma and even into Kansas and Colorado, I mean, this is our winter wheat area. And of course, if you're there during this time period, they're going to be harvesting winter wheat. So a lot of the browns that you're seeing showing up right there is really the winter wheat crop that's ripe and being harvested.
Anyway, I'll let you continue. As long as we were on a break, I just wanted to chat and see your thoughts about that as well.
No, I would agree completely, and I didn't point that out. Thanks for mentioning it.
So Daryl, what's your estimated yield?
So Bill was asking, what's your estimated yield?
For whom?
North Dakota.
For North Dakota, for soybeans. Are we going to be above average, or below average? I'll make it easier for you.
In the areas that were not too wet, I think we're going to have a very good season. I would say above average. I just don't know how many wet spots will bring that overall average down. But I have, from my conversations with farmers, most of them are very, very happy to this point. The areas that are, say, slightly above average rain or a little bit below are really having a good crop. I know there's some big exceptions out there.
Yeah, there's areas and pockets where it's extremely wet. And I know there's, as you said, there's areas that are really kind of on the dry side, live in rain shower to rain shower. So
yeah,
there's considerable variability, which is normal.
Oh, so true. But yet every summer I get a lot of phone calls that say, that are always surprised every year.
Well, from Daryl, I promise from here on forward, I'll stop talking about the weather.
Oh no, I like your weather stuff.
Daryl,
Those 6 to 10 and 8 to 14-day forecasts are my nemesis every year.
Daryl, do you take your weather data and make yield projections?
So Bill was asking if you take the weather data that you have and try and do yield forecasting or yield projections.
I do not in a professional sense, but I work with some farmers based on what they tell me and the future to do it in a very non-professional way. I've been asked that, especially by international traders that call me or email me about that data, wanting to do that, but I just always tell them that it's a little bit outside of my expertise and outside of my time. If there's 300 hours a week instead of 168, I'd be so much more efficient.
Ooh, does anybody do that?
Do you know of other entities or people that do that?
No, but someone should. I wonder if someone at DTN must be doing that with the estimates. I get asked all the time, especially, I'm always amazed how many phone calls or emails I get from overseas folks asking those types of questions to me, because I think NDON is so widespread and a little bit more noticeable than maybe some of the other mesonets, and they think we have that data. But it would be very useful, I think, and I know that it's somewhat doable, just finding the right people.
I see Jenna looking at the clock.
All right, it is 8:50. Hopefully we have everyone back in front of the screen here. And we do have a question, Frayne.
Okay.
We have a question asking about prevent plant, specifically in southeast North Dakota. Basically says, does NVDI show large amounts of prevent plant, specifically in southeast North Dakota?
Yeah, and to some degree it will. This region right up here, and Daryl and I were just talking about that for those that took a break. For this region in southeast North Dakota, you know, some of that darker brownish color is going to be either prevent plant and or the corn crop that hadn't been harvested yet. So one of the things that I did that I usually do is not only on the March planting intentions report, but also on the June acreage report. I look at what happens in North Dakota. You know, in a typical year, if we include hayland acres, and again, some of that would be alfalfa hay as well as grass hay. But if we include all of the crops that are reported in both the prospective plantings report in March as well as the June report in acreage report, we have approximately 25 million acres of cropland in North Dakota. And so from that, I try and kind of work backwards and say, well, what's kind of implied for prevent plant? What would be a typical prevent plant number for North Dakota? And for reference point, based on the official FSA data for reporting of prevent plant, if we look at a 10-year average, and I've done it a 10-year average, a 15-year average, I've done it Olympic average, I've done it a simple average. If we look over that time frame, the last 10 or 15 years, North Dakota typically has between 1 and 1.2 million acres of prevent plant. So that's kind of average. Now, obviously, as Daryl's pointed out, average is that midpoint, but we have some extremes. We have years like a few years ago where it was drier, where we had almost all of our acreage seeded, and we got years like 2011 where we had 25% of the state that didn't get planted. So we do have some quite considerable extremes. But if you think of that 1 to 1.2 million acres of PP as normal, in the March planting intentions report, implied in those numbers was about 800,000 acres of PP. When we got to the final acreage report, implied in the numbers, again, if I'm doing the math backwards, it looks like we're going to have about 2.1 million acres of PP in North Dakota. And a large portion of that is going to be in this southeast region of the state. There's going to be a lot of those acres, again, the corn from last year that didn't get harvested, and or those acres that did get harvested but were just never able to plant again. So we are looking at an above average amount of PP in the state, but not nearly the levels we saw, for example, in 2011. I know that's kind of a long-winded answer to a pretty short question.
Well, that's okay. Well, that was the only question I saw come out of that break.
Okay, so I'll keep plowing forward, and we're going to take some short breaks here to be able to allow people to ask some questions. So let's dive into the actual supply demand numbers. And again, these are reproductions that I've made for the WASDE report, the World Agricultural Supply Demand Estimates. These are USDA forecasts, and they're tracking of what we're, not only the production side but also the usage side. So just to explain this very quickly for those that haven't studied this in a while, the top half of this table really focuses on the supply side, the inflow of grain into the U.S. system. The bottom half focuses on the usage side, or how quickly is the soybeans flowing out of our system. And at the very bottom, we have an estimate of the ending stocks. And just to remind everybody, this is based on a marketing year. The marketing year for corn and soybeans begin on September 1. So all of the numbers in the far right-hand column highlighted in blue, that's for the 2020-2021 marketing year. That begins on September 1. So we don't have all of the books closed on this middle column, which is last year's numbers. So this is the forecast for the crop that's in the ground right now. This is the forecast for the numbers from last year, and we also have the 2018-19 as a reference point. So this number down here for estimated ending stocks is not an official number yet. USDA will do another survey of farmers and of industry to find out how many bushels are in inventory as of September 1. We'll get those later on at the end of September. So this in the grain stocks report. So we're getting very close to knowing what these numbers are. Most of these numbers are still estimates. We do have some survey, farmer level survey based information for planted acreage. The yield number that is currently embedded in these projections is still the trend line yield. So again, USDA has not updated their estimates for yield. They will do that in August. August is the first month that USDA is going to do farmer-based survey, as well as using satellite imagery to try and make an estimate of what the yield potential is for the US crop. And again, they will also do that by state. So for those that receive those surveys, please fill them out, because it is important information to try and track things as accurate as we can. So again, in August, there will be in the next, in the middle of August now, when the next WASDE report and the production report's coming out, there will be a survey-based estimate. It'll be primarily a farmer-based survey. In September, we're going to redo the farmer-based survey, USDA will, but they'll also add in what's called the objective yield survey. So they do send enumerators. They send people out into each of the states. They randomly select particular fields to try and do a yield estimate, very similar to what a crop adjuster would do. They're doing plant populations. They're doing pod counts for soybeans. They're doing ear length and ear density for corn. Those reports will come out and be updated now in September. So that'll be the first month they do objective yield surveys. August and September and October, they also have farmer-based surveys. So when that information hits the market, there's going to be some additional spark or volatility. When I've looked at what private analysts are currently forecasting for yield and yield potential for US soybeans, the numbers that I'm seeing are a little bit higher than this. So let's just round that up to about 50 bushel average. Right now, there's a lot of traders and analysts. The mindset of the industry right now is that number might be a bit low. To have a national average yield closer to 51, possibly 52 bushels is really what the traders are thinking right now and kind of had booked into the futures market. So again, on August, we'll have the production report that'll be updated. On the usage side, so right now, again, that's why I went through the weather forecast. A lot of it is saying, what is the yield potential? We're looking at about a 4 billion bushel soybean crop right now. It's not a record large crop, but it is large. It's towards the upper end of our production range. Right now, in the WASDE forecast, these estimates for crushing and export are all mathematical forecasting. We do have a little bit of information, and I'll talk about that in a moment, on sales that have already been booked for delivery in this 2021 timeframe. But we don't have a lot of information yet. It's, again, very early in the season. So I do want to emphasize one of the biggest volatility factors, one of the biggest unknowns within the usage, the supply, the demand side of the equation is the exports number. The crushing number, again, there isn't the volatility in domestic crushing. And again, domestic crush, we take the soybeans, use them domestically, crush them into oil and meal. The primary use of the meal, obviously, is for livestock feed. We do export about 25% of our meal. On the oil side, again, a lot of that is used domestically. About 30% of our soybean oil goes into the biofuels industry. So again, what happens in the biofuels sector does have an impact on soybean and soybean crush margins. But the big unknown, the one that's always the most difficult to forecast, is the exports. So I'm gonna spend some time talking about export and what the export potential is. Now, USDA is forecasting that our exports for this 2021 marketing year are going to rebound. They're going to return to levels closer to what we see before the pre-trade war. In the assessments, the process that USDA uses for forecasting this, they do take into effect, or they try to take into account, the trade rules and the trade regulations. And so in this current forecast of about 2 billion bushels of soybean exports, They do have embedded in that the phase 1 agreement. And I'm going to go through in a few minutes, kind of tracking how are we doing on this phase 1 agreement so far. So there is the expectation that U.S. soybean exports into the Chinese market are going to rebound. Maybe not return to the levels we saw pre-trade war, but they're going to be very close. Now, one of the challenges that everybody's having, not just USDA, but everybody does this forecasting work, is what's going to be the impact of COVID-19 and how might that change kind of our export outlook. And I'll talk in more detail about that in a few minutes. But I do want to give some reference points here. The numbers that we're seeing for the old crop, this is the crop that's still left in the bin, of 1.6 million bushels, or 1.6 million, a billion bushels, excuse me, get my units right, 1.6 billion bushels. Again, we're a little bit behind the pace that we saw even last year, again, in the peak of the trade war. The current expectation, again, is that will rebound, but I'm not convinced that the modeling that USDA is using is fully compensating for the potential risks from the COVID-19 and what that might mean, especially on the international market. So it looks as though we've had a couple questions come in. So Jenna, is there anything?
Yes, we do. So question is, with carryover dropping, why do you think soybean futures are the same or lower than 18-19 with much larger carryover?
Okay, so if I can just hold that thought for a moment, I will try and get to the short answer is, right now I think most of the market analysts, those people that are really looking at at these numbers, are forecasting a slightly higher yield number, which means our right now the expectation is we're going to have a larger crop than what USDA is forecasting. And I think there's going to be quite a few of the market traders are questioning this exports number. And I know in listening to other analysts, there's a lot of them that are saying this 2 billion bushels might be tough to achieve. Okay, so the combination of a little bit larger production estimate, a little bit smaller export number, and all of a sudden this number at the bottom line starts to rebound and gets back to the levels, not like we saw in 2018, 18-19, but we might be cleaning closer to these 2019, the current marketing year numbers. So that's kind of the short answer. I'll go through in more detail in a moment here. Another question?
Just someone thanking you for the good information.
Okay, well, I appreciate that. So again, I want to put it in historical perspective. I usually try and throw this up. The blue line is crushing, it's domestic crush. These dotted lines in the very end are what the current USDA forecast is for the upcoming marketing year. Again, there's been a pretty steady growth in our crush demand. Again, that's domestic demand. It's an important number, but it tends to be relatively stable. And we've had some pretty aggressive crush numbers for the last several months. So the domestic crushing industry is running near capacity right now, which is, again, a good thing for domestic demand. But again, it makes it really difficult to say, well, can we squeak out more? Is there more growth potential in our domestic crush industry? And again, as I said, the really big unknown, the one that causes a lot of volatility in prices, is this exports. We've seen, because of the trade war between the US and China, a decrease in our exports, soybean exports. I'll talk about, again, a bit more about that in a moment. Again, I do think that there's some of the analysts, private people are watching this USDA number for forecasted exports and thinking that might be a bit aggressive. I just want to remind everybody who are the major buyers of US soybeans. Again, these are whole soy now. This isn't soybean meal. This is whole soybeans. Even with the trade war and the decrease, China is still our #1 customer. I know that there was some discussions early on when the trade war first began that, well, if we don't sell to China, we'll just turn around and sell to other countries. This will be just kind of a round robin of who buys from whom. The challenge we have is, if we're going to sell whole soybeans in the global market, you really need to sell it to a country that has crushing capacity. And there's very few countries outside of China that have very large domestic crush capacity. We have been exporting quite a bit of our soybeans into Mexico. You've noticed that the Mexican market has been growing over time. I'll show you another chart that represents that. That is a really solid market for us, but again, not nearly as large as that China market. When we look at current export pace, so what I'm trying to measure here is these are soybean exports. These are contracts that have been signed for the delivery in the future. And again, when we think about how quickly are we using up the supplies, we're looking at, in a lot of market analysts will look at these export sales numbers, not necessarily export inspections. Export inspections measure soybeans that have been loaded onto a vessel. They're loaded onto a vessel, they're inspected before they leave the country. And that is also, again, one way of factoring in or looking at usage. And I know the cash market spends a lot of time following those numbers because, again, the cash market has to worry about making sure the right amount of grain is in the right location at the right time. But in the futures market, they tend to look at these export sales numbers and saying, well, how many of the bushels that we have in our system have been committed for delivery? Even though delivery may not have been accepted yet, how many bushels have been committed for delivery? And these are export sales now to all sources, not necessarily China only, but it's to all sources. The red line, again, this is for the current marketing year, so this is old crop. We haven't started, at least on this graphic, I haven't started recording or keeping track of the new crop sales. I'll get to that in a moment. So you can see, again, we have this really peak time period in this October, November, December time frame that we tend to start making a lot of these sales, booking a lot of these sales. And as we get into this January, February, and March time frame, and I know Bill will talk about this tomorrow, our export sales start to drop off. And this cyclical nature of export sales really plays a big role not only in market psychology, what happens in the future market, but also what happens in the cash market, and in particular what happens to basis and these basis cycles. And again, I know Bill is going to talk about that tomorrow. The black line is what we saw for export sales last year. The red line is what we're seeing right now. So right now, seasonally, we're in this time frame where we don't have large sales. There isn't a lot of new commitments, especially for old crop. We are getting some new crop commitments. Again, I'll go through that in just a moment. So this is all export sales. This is a graph of the same information for China purchases only. So these will be U.S. sales to China specifically. And again, as you notice, we did see some of a slight rebound for this 2019-2020 marketing year, the old crop marketing year, where the sales have dropped off. Basically, China has been buying a lot of their soybeans from Brazil. Brazil had a very large soybean crop this year. The expectation as we move forward is that soybean plantings in Brazil are going to increase again, not dramatically, but it's going to be continued growth in their soybean industry and their soybean sector, which again will put some competitive pressure on the U.S. soybean export levels. Right now, we're seeing some export sales, some new commitments for old crop soybeans. A lot of the China purchases we've seen and reported the news right now have been for new crop. It's for the 2020 crop year. It's not for the 2019 crop year. So again, right now, China's a little behind in what we'd normally see, again, without the trade war, without the trade tensions between U.S. and China. Their purchases for old crop have been relatively slow. Again, that's reflected in some of the USDA forecasts. Just a little bit different way of presenting this. This is a cumulative. So this graphic right here is how much do we sell each week. This reports the same information, but is cumulative. So every time we make a new export sale, that export sale is added to the pile. What we'd like to see is this pile of export sales grow as quickly as possible. We see this rapid growth as we get into, again, this October, November, December timeframe. But as we move through the rest of the season, it tends to flatten out. You can see the pattern of buying this year is a bit different than we saw last year. 2017, this purple line right here, is the reference point for the phase 1 agreement. So when we think about, well, if China is going to be able to fulfill their commitments under phase 1, a lot of people are looking at what we've seen so far in 2019, old crop versus what we're seeing in the 2017 time period. The challenge we have is that the phase 1 agreement timeline and the timeline for marketing year is slightly different. And I want to go into that in more detail in a few moments. So right now, again, for old crop sales, China is basically behind what they have seen before. So we're getting to the end of that old crop time frame. Again, I don't think China is going to catch up. The real hope, the anticipation is that the new crop sales, new crop purchases by China will start to kick in and will be closer to the levels that we've seen the last several years. So the information I just showed you, let me go back one slide. This is through the reporting time period as of the middle of July. And since then, China has come in and started buying, in particular, new crop a little more aggressively. So these are actual reported sales. I blended, I tried to focus on the soybean purchases by China, again, that are specifically reported to China. Sometimes some of these unknown, the sales are reported to unknown destinations, end up going to China. So I want to be a little bit cautious. Not all of these are formally defined as Chinese purchases. Some of them are unknown. I did try and identify those. And really the reason that the unknown sales reports come up and they do get diverted to China is that when the reporting requirements for export sales, if it's over 100 million metric ton, it has to be reported within a 24-hour time period. And if it's a Chinese company that has come in and bought that, it will be reported as a sale to China. Sometimes what happens is an intermediary broker. So there'll be a company that comes in and purchases soybeans from the United States. That company is not identified as saying where they're going to be able to resell it. So there's not a destination reported. That's why it then gets reported as an unknown. So it's a global company that's come in and purchased U.S. soy, but they have not identified what the destination is, at least on a formal basis. So again, anything highlighted in the blue is identified as that 2020, 2021 marketing year. So beginning on July 16th, we've started seeing some increased buying. July 17th, another reported, some additional reported sales. That was unknown. July 20th, we had some more specifically Chinese identified purchases. On the 21st, they came in and bought some additional purchases. We look at July 22, again, some additional ones. Some of those were unknown, but several of them had been identified as Chinese purchases. The 23rd, we saw some additional. 24th, we saw some additional. 27th, we've seen some additional. Now, I didn't check this morning to see if there were some additional sales this morning, but as of July 27th, these are the reported numbers. So we are seeing some buying interest by China for U.S., in particular, new crop soybeans. Now, we don't know with these reports where they will be shipped out of. Is this going to be a PNW shipment, or is this going to be a U.S. Gulf shipment? The assumption is a lot of this is going to go through the PNW, but again, it may not be identified yet. We don't know specifically. So coming back to kind of this original question, why are we seeing the futures market prices today similar to what we saw at this time last year? And again, a lot of this is built-in expectations. So the futures market is all about what traders anticipate will be happening as we move forward in time. And again, I think part of that anticipation is that when we look at these carryover stocks, let me just go through this graphic real quick and I'll try and reiterate the question that was raised before. The green line represents U.S. total production. The red line is U.S. usage, including exports. These blue bars on the bottom is what I really want to focus on. So that would be the stocks to use ratio. It's scaled on the far right-hand side. The production and usage numbers are scaled on the left-hand side. One of the things I want to point out, of course, is these bars on the bottom. So think about this as a stocks to use ratio. So if we look at our ending stocks divided by our usage. Think about this as what percentage of our needs do we expect to have in reserve at the end of the year? And so it's a percentage number, not a bushels number. Now, the current forecast, based again on this new crop USDA forecast, is for carryover stocks to be near 10%. Now, if we look back at this 2017-18 time period, that's very similar to what we're seeing there. If we look back normally, a normal year, the new normal we've become accustomed to is somewhere between a 5 and a 7% carryover stocks. Again, this is pre-trade war. Again, that's where we saw, and again, this 2013-14 time frame where we had that big spike in prices. We had extremely tight U.S. supplies as well as global supplies of soybeans. Those are kind of the new normal. That 5 to 7% carryover stocks has been typical. We're still looking at, even though we're looking at again a rebound in export sales, we're looking at our U.S. inventories dropping, but historically they're still at relatively high levels. So, and I do think that a lot of the market traders and analysts are looking at the USDA forecast for yield being a little bit low. The bias right now is for having a larger crop than what USDA is forecasting, and that there's a lot of questions, again, concerns about, are we going to be able to reach those targeted export sales that USDA is forecasting? I do want to, before we take another break and have some more questions, I do want to put in perspective how does the U.S. fit within the global marketplace? And if we look at, and again, these are USDA numbers, and again, I'm using that mainly as a reference point because it's public information. It's a lot of the information that the traders look at as a reference point. So one of the things, I want to come back to, Brazil has become a major export competitor for us. Right now, if you look at actual numbers, not only reported by USDA, but again, cross-checked by some of the Brazilian export numbers, Brazil is the largest soybean exporter in the world. The United States is the second largest. Part of the reason these exports have dropped the last couple of years, again, is because of the trade dispute between the United States and China. USDA is forecasting a rebound in some of those, not quite to the pre-trade war levels, but very close. But again, we have to look at Brazil as a major supply competitor for us. And again, this is exports of whole soybeans. This is not soybean meal. Argentina is an exporter of whole soybeans, but they tend to be a major exporter for soy meal because of the relative taxation, export taxes in Argentina. The export tax rates for whole soybeans are a bit higher than they are for the tax rates for crushed products, for soybean oil or soybean meal. So they're providing an internal incentive to crush their product and export the processed product rather than exporting whole soybeans. So when we look at soybean exports as whole soybeans, it's really these two countries, the United States and Brazil. And again, with the growth rate of the Brazilian production, that also then has resulted in export capacity. And again, China has shifted most of their exports during the trade war to Brazil rather than the United States. This does reflect, this number right here is a current forecast for the crop that the Brazilians will be planting now beginning in a few months. So as we're harvesting our crop, they'll begin planting, especially in the northern regions of Brazil. Both USDA as well as some of the private analysts, I know International Grains Council that puts together some forecasts on soybeans. The forecasted numbers for increase in planted acreage as well as total bushels produced out of Brazil for their upcoming season is to have an increase or a growth in their production numbers. Now this is export levels, not necessarily production. Again, who are the major importers? Who are the big importers of soybeans? Not necessarily just from the United States, but this is all imports. There was a lot of questions going on, in particular during the trade war. You see this green bar right here, which is exports. Again, China did, how much did China import in total? This was this drop we saw was primarily because of African swine fever and the fact that the hog herd in China had been cut because of African swine fever. There has been again a rebound in their imports off the global market, and as they're trying to compensate and correct for or adjust for the African swine fever, rebuild their hog herd. The expectation right now is that the total number of imports will start to grow again, actually be for the 2020-2021 growing season or importing season. Again, this is based off of our US calendar, will actually be slightly higher than it was not only African swine fever, but also what we saw last year. So again, the expectation is China is going to rebuild their hog herd, that their need for soybean meal, as well as other feed products like corn, is also going to grow. European Union is typically classified as the second largest importer of whole soybeans. Then we get South Asia. And when USDA categorizes South Asia, they're looking primarily at Indonesia, Malaysia, Philippines, Thailand, and Vietnam. They're clumping those South Asia countries together. And then you also can see the growth rate that in Mexico. Again, this is all imports, not just imports from the United States. The Mexican market is primarily a US market. South Asia, I know there's been a lot of work by USEC, which is US Soybean Export Council, to try and grow the export potential in South Asia, in particular for US soybeans. But again, it really pales in comparison to what's happening in China. So if we look at China trade tensions, look at some of the political issues that we're now seeing and the concerns, are we going to be able to fulfill the phase 1 agreement? This is really what a lot of the traders and analysts are looking at, is are we going to be able to reintroduce US soybeans into that China market? So let's take a break right now. Let me go back to this slide. Let me take a break. It looked like there was another question that came in. So Jenna, if you could help me with that, I'd appreciate it.
Sure. Yep, so we've got a question about the graph you had that showed whole soybean exports from the top 3 exporters globally.
Okay.
Just wondering if there is data out there to show whole soybeans plus soybean meal as well. So total whole bean and meal exports.
Okay, so if you bear with me for just a minute, I do have the same graphics for soybean meal. So let me go down to the end of my presentation here and find this one right here. So this is the same graphic. It's the same information. It's USDA. This is for meal. Again, who are the big exporters of soy meal globally? As you can see, Argentina is the largest exporter of soy meal. Brazil is number 2, and then the United States becomes number 3. And what I usually like to do when I'm talking about these is look at the trends. What are the trends? Is there growth in the exports? Is there a contraction of the exports? There's the stability. So on Argentina, again, there tends to be some variability from year to year. Brazil is a major export competitor for meal exports, but also in the United States. And again, US tends to be relatively stable. Paraguay does export some meal, but the 2 big ones, the biggest one being Argentina, and again, a lot of that is because of their export taxes they put on both soybeans as well as meal and oil. They want to incentivize or provide an incentive for meal exports. When we look at who imports meal, again, this is meal, not whole soy. The big importer is the European Union. And again, a lot of the crush capacity they have in the European Union is focused on rapeseed or canola, because they're bigger producers of canola than they are of soybeans. So if they're importing, they have some crush capacity for soybeans, because again, reflected in what we saw before, but a lot of that crush capacity is focused on the canola, or what's commonly referred to as rapeseed. So European Union does tend to buy a lot of soy meal off the global market for their livestock industry. Interesting enough, when we look at country breakdowns, Vietnam tends to be number 2, Indonesia, Thailand, and then Iran. notice that there's been a start to be a growth in soybean meal imports, both in Vietnam as well as Indonesia. They don't have the crush capacity within their domestic or within their local countries. Part of it is, again, the crush margins are very challenging, especially for soybeans in that South Asia market, because if you import whole soybeans and crush it domestically in these South Asia countries, yeah, there's demand for meal, but you also have to get rid of the oil. And Indonesia is the largest palm oil producer, and palm oil tends to be a lower priced vegetable oil versus soybean meal. So those domestic crushers really have a hard time getting rid of the meal. So, I mean, the oil. They can make a profit margin on selling the meal, but they have to discount the oil, and so their profit margins for the total crush ends up to be a bit more challenging. So there's a preference right now, anyway, with the current economics to try and import soybean meal, not necessarily whole soybeans. So I hope that answered the question. If not, please, type in another question if there is anything that I missed or that you didn't quite understand.
I'm muted. Here we have a question about China moving to modern hog production, maybe meaning their recovery from ASF. They've had to make some changes to make their hog production more efficient. How do we anticipate this to affect imports to China?
And that's a really, really complicated question, because the tendency is as the statement is absolutely true. As China is now trying to work through the African swine fever, trying to rebuild their herd, they're really focusing on the larger commercial production, having production systems similar to what we see here in the United States. They're trying to move away from what's called the backyard hog production, where they have a few hogs in the backyard and they're using that as part of their supply chain, and moving more towards these confined commercial systems. Because if you're going to manage African swine fever, just like we're trying to manage COVID-19 right now, the simplest way to do that is to try and isolate the animals. If you have a confinement system, you're able to isolate and prevent this cross-contamination from animal to animal, which is very difficult in the backyard systems and the open air systems, much easier to do in the confinement systems. As you move to the confinement system, they tend to also move then towards the more modern feeding systems. So there's one argument that says, well, as you move to the confinement systems and you're looking more at a soybean meal corn ration, that's again give you the higher performance, the higher growth rates, that there might be an increase in meal demand. But on the flip side, there's also the backyard feeders that are using soybean meal also waste a lot. So the spoilage and wastage portion of those backyard feeders that are buying soybean meal as part of their feed ration, again, the spoilage and wastage part of those backyard feeders is a little bit higher. So there's this debate going on, is the demand, as they make this shift into more confinement production, is that going to increase potential meal demand, or is that going to actually decrease it? We're really, it's unclear right now. I think the conventional wisdom, the current bias is that it will likely increase the demand for soybean meal, even though they're going to be more efficient in the meal usage.
So we have a two-part question, Frayne.
Okay.
Is there an opportunity for the U.S. to export more soybean meal? First of all, more specifically, would the North Dakota soybean producer benefit if we could crush soy in the state of North Dakota and export meal and feed livestock locally?
Again, a really complicated question. I'll try and answer it as succinctly as I can. There is growth potential for soy meal exports. So the big question is, we look at what regions of the world have growth potential for, again, recognizing that most of the soybean meal is used for livestock and livestock feed. So we look at those parts of the globe that have this growth potential, not only from a growth in population, but also growth in economic capacity. And this is again where COVID-19 comes in and starts clouding the picture. Pre-COVID or pre-coronavirus, that South Asia region, when you're looking at the Vietnams, the Thailand, Indonesia, Malaysia, Philippines, not only did they have a large young population, but they also had the growth potential in their earning capacity. And as earnings start to grow, and Bill has noted several times in his conversation or his presentations, when you start getting women moving into the workforce, there's a tendency to start moving to having not only higher incomes, but also you move into more meat consumption. A lot of the meals are now not necessarily prepared at home, but they're looking for convenience. So they have the capacity, they have the income to be able to buy more processed products, a move towards including more meat and meat products in your base diet. These are the areas of the world that we have the growth potential for increased meat demand. And as the meat demand increases, obviously the demand for soybean meal and corn also start to grow. So the question then becomes, well, if we're going to have increased demand for meal, i.e. through either whole soybean exports or meal exports, what parts of the world have that growth? The Chinese have really built that infrastructure domestically, but a lot of these other countries have not. So the question is, if you're going to expand meal or crush capacity, do you expand the crush capacity in their native home country, or do you expand the crush capacity in the United States and try and export the meal? And I suspect there's going to be some of both that occur. It's not going to be one or the other. We'll see some of both. So I do think there's the capacity, there's the interest in expanding U.S. domestic crushing to try and meet those export needs. Would that benefit the North Dakota producer? I do think it would. It would definitely help with stabilized basis volatility if we have domestic crushing. We saw that as we built more ethanol plants locally. We saw the corn basis levels start to stabilize. The average increased a little bit, but I think the big benefit to the farmer is the stability of the basis levels. Again, to meet that Asian market, especially either both North Asia, when we're talking about Japan, Korea, and Japan and China, or the South Asia, where we're looking at the Philippines, the Thailands, the Cambodias, the Vietnams, Indonesia, Malaysia. We have some shipping advantages. I'm going to go through that in just a moment. We have some distinct shipping advantages. There would have to be some adjustments in our infrastructure at the port facilities, also especially PNW, to be able to handle more soy meal versus soybeans. The mechanical kind of the system you need in place to be able to handle meal is slightly different than it would be for whole soy or for corn, the bulk commodities. But those conversions are not necessarily intensive. The big capital intensive portion would be increasing our domestic crush capacity, because right now the U.S. crushers are running nearly at full capacity. I don't know that there is some additional growth, but it's going to be, we're really looking at adding more plants to be able to meet the needs of that South Asia market. Now, with COVID-19 and the pandemic, with the potential for not only domestic but a global recession, I think that's raising some questions in people's minds of what is that meat demand look like in those, especially South Asia markets. We really don't, it's a little bit early yet in the pandemic to really figure out what the economic growth potential is, the new growth potential or rebound potential in those South Asia markets. Again, given the fact that we're now starting to see infection rates in Cambodia and Vietnam for COVID-19 start to increase. Thailand is already starting to have some problems with infection. Again, we're just really not clear what the growth potential is for, the economic growth potential is for that region yet. So again, kind of a long-winded answer to a short question.
And then I think there was just a part, Frayne, if you could touch on your thoughts about if we could get a crush plant in the state of North Dakota and the ability to use that meal within our state, if we can get more livestock in the state, and kind of how that would benefit North Dakota soybean growers.
Right, and so that's kind of a chicken and the egg problem. When we look at what species use a lot of meal, soy meal, It's hogs. There's some that's used in beef feeding. There's obviously a lot used in the poultry industry. So there's kind of a chicken and the egg problem, because the dominant livestock we have right now in the state is cow-calf. It's utilizing our grasslands. It's utilizing, again, the calf production. We don't have in our state right now a large beef feeding industry. We don't have a large hog feeding industry. We don't have a large poultry feeding industry. And so there's this chicken and the egg problem, excuse the pun, of which comes first. Is it the supply of the feed, or is it the demand from the livestock sector? And typically what happens is these grow parallel to each other. It's kind of a stair-stepped approach. Is there capacity in North Dakota to increase our livestock feeding sector? There is. The real question is there the economic incentive to do that? I mean, will the limiting factor, in my opinion, is the interest and desire from the risk capital, the investment capital. It's the equity capital portion of it. There's companies out there, there's banks out there would definitely supply financing for a good investment opportunity. It's this risk capital, it's the equity capital portion. Who's going to put down that equity capital to be able to build the infrastructure, not only for the livestock feeding, but also for the soybean meal crushing, the crushing capacity. So it's really this uncertainty in my mind about who's going to put the capital down, the investment capital, to get this infrastructure started within the state.
Thank you. I think that question touched on every conversation we have in the office lately. So that was a good one.
There's a lot of shifts and adjustments right now that, the future is very unclear. All right, so let me go back up. I'm gonna start addressing a couple things. And I know Bill's going to touch on this tomorrow, so I don't want to steal a lot of his thunder, but I do want to show you some graphics on right now, how does the PNW, soybeans off the PNW, especially for old crop, compare price-wise to some of the Brazilian bids. So again, right now we do have access, because of our trading room, access to a lot of this information. I updated this chart. So this would be, as of yesterday, this would be the export bids for the next delivery month. So again, when we think about the delivery of soybeans, we're not necessarily looking at delivery in July, but this would be delivery for soybeans off the PNW, the US Gulf, out of Brazil, as well as Argentina, for delivery in basically first half of August. So what I did, we've got information for this. This is FOB, this would be FOB. So this would be the bids loaded onto a vessel. So this would be in dollars per metric ton for US soybeans. I converted it to dollars per bushel because most of us think in dollars per bushel, not metric ton. These are the bids then for loading onto a vessel, ready to leave port out of the US PNW, the US Gulf, Brazil. Again, this would be an average of the two major ports out of Brazil, Paranagua and Santos, and also the river ports out of Argentina. So this would be, again, the cost loaded onto a vessel. This is the dollars per bushel. As you notice, our PNW bids for dollar per bushel is higher than it is in Argentina or the US Gulf, but it is right now today lower than it is out of Brazil. But we also have to keep in mind the freight differential. And again, freight costs from PNW to what's called the North Asia. So again, the data that we have right now that's readily accessible, this would be ocean freight to North Asia. So when we talk about North Asia, again, that would be something like a Japan, a Korea, or a China delivery point. So again, these would be kind of average trade routes. So the freight cost for PNW right now, again, as of yesterday, is about $21 a ton, almost 22. It's $43 a ton delivered to that region out of the US Gulf, about $31 a ton for Brazil, and about $37 a ton for Argentina. Again, I converted this to a dollars per bushel basis, so you get a reference point. Costs about 60 cents a bushel to get it from PNW into the North Asia based on today's freight rates. So if we combine this, if we add the cost of the soybeans loaded onto a vessel plus the freight, we get, again, this CFR, cost and freight. It's not a CIF bid, which includes insurance. So there's a kind of a missing piece here. So if you're an importer, if you're basically a buyer from China, you want to bid from a US company, it usually includes this insurance cost. I don't have access to that right now, so I just included the cost of the soybeans plus the freight. If we look at this cost per bushel now, US soybeans out of PNW versus Brazilian soybeans out of their ports, we are right now, today, the lowest bid. And I think that's one of the reasons you're starting to see the movement from Chinese buying away from the Brazilian and Argentine markets and back to the US markets for both a little bit of old crop as well as now moving into new crop season. So these would be old crop bids. I want to be very specific about that. But we see these, the freight rates don't vary a lot from time. I'll show you a graphic in a moment. But these bids coming out of the different ports do vary quite a bit over time. And again, if I'm an importer, if I'm a US, a Chinese buyer or a Japanese buyer, I'm looking at what's the cost delivered to me. Okay, so this is a graphic. Again, this goes back for about 2 years. You can see we still have some of the influence of our US-China trade war going on. The blue line right here is US Gulf. The red line is US PNW. The gold line is FOB Brazil. So think about that as the Brazilian price. And then the gray line would be Argentina. Now what I'm going to do is just notice that there is a general tendency for these to go up and down together, but there's a lot of volatility or changing that goes on seasonally between what happens in Brazil and what happens in the US. So I want to zoom in. So this is the exact same chart, exact same numbers, except I narrowed in for the last 12 months. And one of the things I want you to think about, and I know Bill is going to talk about this and reference it in some of his discussion tomorrow, is if we look at the red line, which is PNW, versus the gold line, which is Brazil, you know, yes, we have a freight advantage out of PNW, but that freight advantage can be absorbed or that offset considerably by what the base bid is. So if we look at this time frame of the wheat, kind of this winter months, yes, PNW is higher, but that freight advantage we have out of PNW doesn't compensate for the lower prices out of Brazil. So as we look in these time periods of February, March, April, May, June, we notice that that PNW bid is higher than the Brazilian bid, and the freight rates don't offset that. But also now notice as we move past this key harvest and shipping period out of Brazil, and the Brazilian port prices start to increase, now all of a sudden our US bids, in particular out of PNW, can be at an advantage again as we adjust for the freight. So we're starting to see this shift occurring. This happens usually on a seasonal basis. What happened in obviously in 2018 because of the trade war was a major disruption to it, but we're starting to see these seasonal patterns start to return. Now, when we look at pure economics, right now today, it makes some sense to start buying soybeans off of the PNW. There's not only a cost advantage, but also a freight advantage. Throw in, obviously, the uncertainty about politics, and life gets very interesting now in the world of soybean exports. So if we look purely at economics, we're starting to see this shift. The PNW bids are now becoming competitive. We're starting to see some of the basis patterns that Bill's going to talk about tomorrow start to reappear. Again, this is the normal seasonal pattern we're starting to pick up. But we have to be concerned that politics may get in the way again and cause these economics to start fluctuating. So we have to be watching that. And I know the futures market's watching that very, very closely. I did also download for your reference the differences in freight rates. Again, this would be from the different ports, PNW, Brazil, Argentina, US Gulf, to delivery to that North Asia market. Again, I just want to point out, if we see these over time, they tend to go up and down together. This drop right here is really in freight rates due to COVID-19 and the fact that a lot of the ocean-going vessels didn't have much to carry. So freight rates did drop. They're starting to now improve again as our economies start to reopen, as we start to see shipments both domestically and globally start to rebound. So what we're really concerned about from a U.S. domestic shipping standpoint is what's this relationship between the gold line, which is the Brazilian bid versus the PNW bid. And again, notice also that historically the shipment from the cost from PNW to the North Asian market is relatively low compared to some of the other freight rates. So it looked like there was another question that came in, so I'll take a break here and try and answer the question.
That's right. We have two questions. So first of all, Frayne, I want your take on this. What percentage of PNW bean shipments come from North Dakota?
Very good question. Of all soybean shipments out of the PNW, how much comes from North Dakota? I don't have that number in my head. I do know that approximately 70 to 75% of the soybeans in North Dakota go to the PNW, but as far as all of the shipments from PNW to the global market, how much comes from North Dakota? I don't have that number. Bill, do you have an estimate?
I think it's like
No, of all the soybeans shipped through PNW, how much comes from North?
95% of ours goes to the West Coast. I think
Yep.
about 70% of PNW exports are from Dakota, the rest from Nebraska and South Dakota.
Okay, so Bill was saying about 70% of the beans flowing through PNW comes from North Dakota. The other 25 to 30% comes from South Dakota and Nebraska.
That is similar to what we were discussing in our office here. So we're on the same page. The second question is the current value of the US dollar helping?
Yes, it is. I do have a chart of the, hang on, let me pull that up. I got to get some of my stuff out of the way here. Just give me a moment. So US dollar right here. Let me do this one right here. Let me pull this one up right here. So this is a graph, this is a chart of the US dollar index. A lot of times we use this dollar index as a proxy for the value of the US dollar relative to a bundle of other currencies. So usually when we talk about currency, we're looking at like the US dollar versus the Canadian dollar, the US dollar versus the Brazilian real, the US dollar versus the Japanese yen. So to what you hear on the radio, and a lot of times what people talk about when they talk about the value of the US dollar, we're looking at this dollar index. So it's the value of the US dollar against a composite or a bundle of other currencies. And as you can see right now, it's trading, this is a futures market, it's trading at about 93%. So this would be, again, if it's a 100, it means that the value of the dollar is equal to this composite or this bundle of other currencies. Notice now when we look back at this March, April, May time period, as the coronavirus first started hitting the United States, the value of our currency actually, well, when first news came out, it decreased, then it increased. Again, this is US dollar relative to other currencies. There was actually an interest in getting more US dollars because it's considered to be a safe haven for investments. It stabilized at about this 100 mark for quite a while. Now as the US is seeing a surge in coronavirus, concerns about the growth of the US economy, again, relative to these other countries, we're seeing this drop in the US dollar, again, which makes it easy for us to export, easier to export against other countries, but it also makes products that we import more expensive. So if we're thinking about it as an exporter, lower US dollar does have a positive impact. This is helping us in the export market, but not only for soybeans, but also for corn and wheat. But it also makes it more expensive if we're an importer. So as a consumer, you know, this makes it a little bit more expensive for the products that we're buying globally.
All right. I think that's it. So I keep seeing people coming in and out. If anyone's wondering where I'm getting these questions from, reminder as we get to the end here to use that Q&A tool that you see at the bottom of your screen.
Okay, so I want to make sure we have a hard stop at 10 o'clock because that's what we promised to do. So I have a few more slides I'd like to go through and just comment on a couple things. I'd be happy to try and answer questions. And again, we'll have a little bit of time, I think, tomorrow to be able to go through some of the technical analysis because we're going to run out of time here, which is fine. I want to go through and make sure everybody's questions are answered. Let me just make a couple brief comments on US-China Phase 1 agreement, give you an update on kind of where we're at, and I guess my personal observations about what I think is going to happen as we move forward in time, and I think introduce a lot of the questions and concerns that some of the other market traders and analysts have about what's happening in Phase 1. So just a quick recap. I want to make sure that people understand we're getting very conflicting messages about this Phase 1 agreement. When you listen to some of the information coming out of the trade office, the U.S. trade negotiators, like Robert Lighthizer, who is the chief trade negotiator, the head of the U.S. Trade Representative's office. You listen to Stephen Mnuchin, who's the U.S. Treasury Secretary, who also was heavily involved in negotiating a Phase 1 agreement. You know, their comments are saying, well, we're making progress, we're moving forward, that the Chinese are starting they're living up to their commitments within this Phase 1 agreement. And yet you hear what some of the traders and analysts are saying. It's like, well, wait a minute, they're not living up to their agreement. And part of this is the perspective that different people are bringing to what does Phase 1 agreement really mean. So when we listen to Robert Lighthizer, when you listen to Stephen Mnuchin, when you listen to information coming out of Washington, D.C. and the policymakers, they're really looking at this in the full totality of the agreement. So understand there's 6 chapters to the agreement. Only one chapter, chapter 6, actually talks about additional purchases of U.S. products, and in particular purchases of U.S. agricultural products. So the traders and analysts are focused on that chapter number 6 and saying, wait a minute, China promised to purchase more U.S. ag products. From the political standpoint, from looking at the agreement as a whole, they're looking at all 6 chapters, which 5 of those 6 really focus on looking at the rules of trade. What are the rules that are governing the buying and selling of products and the way that companies interact between the United States and China? And so in a bigger picture sense, there has been movement in changing Chinese policy to make it easier for U.S. companies to do business in China and to make it easier for Chinese companies to buy U.S. products. So a lot of this is in those first 5 chapters. I do want to talk and remind everybody about Chapter 6, which again is really important for U.S. soy. China has agreed under the agreement that they're going to buy an additional $32 billion of U.S. ag products. This is not divided equally across the 2 years. So in the details of this additional purchases, in 2020, calendar year 2020, the agreement was China would buy an additional $22.5 billion in calendar year 2020. Not marketing year, but calendar year. And it's over the 2017 levels. Now, the challenge we have right now is there wasn't a dollar value established for that 2017 number, at least not in the information that has been publicly released. We don't know what that 2017 number is. Are we going to use U.S. records? Are we going to use Chinese records? There's still some uncertainty over how we're going to be able to actually track and score this. There was also, as a reminder, some specific subcategory totals. So when we look at those agricultural products that are listed in the Phase 1 agreement, there's actually 217 specific ag products that are listed that count towards that additional level of purchases. And these 217 products have been put into subcategories. Soybean is one of those subcategories. There's also a subcategory for meat, for cereals, for cotton, for this big bucket called other agricultural commodities, and for seafood. Now, we don't know what the subcategory totals are or what the targets are for soybeans. But we know there is a target. And those numbers are not going to be released because the concern is if it was released, it would impact market behavior. So what is the Chinese buying strategy? I mean, if they're truly going to live up to these additional purchases, what strategy do you think the Chinese will implement? I emphasize China as a value buyer. Yes, price is important, but they're really a value buyer. So, you know, it's like you going to the grocery store saying, I need certain items. I need them for consumption today. And there's some items that I might buy and put in the freezer and store for later on. So they're looking for the best value. It's not always about price. Price is important. Price plays a role, but they're really value shoppers. And the easiest way to try and get to that increased totals is to do one of two things, and some of both actually. Purchase more high-valued products like meat products, and to purchase more products that weren't bought in 2017. Now, I'm assuming that the baseline is for those products that are listed and looking at the 2017 numbers. So in a moment, I'll show you a table. There's still a lot of questions about how is this going to work. So what happens if the US, China can't agree on what the values are? What happens if we get to the end of the year now in December, we say, well, have they met the requirements or not? In at least the publicly released version of this trade agreement, all it says is the parties shall engage in consultations. So we really don't have a lot of clarity on what happens if there's a disagreement on did they meet the agreement or not. What happens if China doesn't meet the agreement? What happens if, yes, this is the target, we agree on what the numbers are, but they fell short? We really don't know. Again, at least in the public version that was released, we don't know what that says. Now, US and Chinese trade officials are meeting. There's going to be a meeting coming up now in the beginning of August between the US trade negotiators and the major Chinese ones to say, how are we coming along? What are some of the things that we need to worry about as we move forward? These are the numbers that, again, everybody's kind of looking at and saying, well, China's behind. Now, I went into the USDA, their trade, what's called GATS, their global trade system. I looked up the 217 items. I added all those up and it said, okay, the information that's reported so far is January through May. That's the only information we have right now for actual shipments. Again, the value of products that have been loaded onto a vessel and shipped to China. When we look at the January through May totals from 2017, they had purchased about $3.7 billion worth of US soybeans. As of January through May, and it's about $1.2 billion. When you look at, of the 217 items identified, they purchased about $20.8 billion total. And again, these are the items: cotton, hides, sorghum, frozen fish, animal fodder. We look at today, Jan through May, they total of the 217 bought about $5.3 billion, almost 5.4. Yes, soybeans is number one, but all of a sudden meats from swine, cotton has moved up, grain sorghum has moved up, and poultry meat has moved up. So again, they're starting to buy slightly different items. This is the number that everybody's focused on. And I want to show you one more slide. If we look on a calendar year basis based on value, now dollars, which is what the trade agreement's focused on, not tons, but dollars, this is what they have purchased, China has purchased so far. This is for US soy. Now notice in 2017, this is the blue line. Their big purchases, the big dollar amounts, didn't really occur until later on in the season. And I do think that some of what we're seeing now as we move into this July, August time period, we are seeing some increased purchases. And whether they're buying it in old crop or new crop for the phase one agreement is irrelevant. The matter is how many dollars of product are they buying. Okay. And again, it doesn't mean that they have to do it on the back of soybean only. They can buy corn. This is what they bought so far. I just want to reference in 2012, before we had this Syngenta and the MIR 162 problem, China did buy dollar-wise a lot of corn. Historically, back in 2013, they bought a lot of US spring wheat. So there's other ways they can reach this total besides just buying US soybeans. So let's stop we're at basically quitting time here. I've already addressed a few of the issues from COVID-19. I'll try and make in my closing remarks tomorrow a few more comments about what I think is going to happen and some of the implications for COVID. So are there any last minute questions that I can try and answer?
Don't see any right now. If anyone is typing them, we'll give it a couple minutes. Otherwise, I hope this platform worked well for everyone. We'll be using the same platform tomorrow morning, again, 8 a.m. to 10 a.m. If you had issues logging in, feel free to contact me the rest of the day today, and we'll get you, obviously if you're on now, you logged in, but we'll get you set up so tomorrow you're not having those problems. And also we have Daryl on the line still, so any questions about the weather presentation for the rest of the growing season, we can take those now as well.
And Jenna, you are recording this as well, correct?
That's right, we are recording this. Will be available at a later date. So if you know someone that wasn't able to listen in, we'll be in communication about how to access that. With that, I don't see any questions, Frayne, and it's 10:01. So I want to thank Frayne and Daryl for their presentations today. I hope they were valuable to everyone. And I hope to see everyone back tomorrow, because we're going to do it all over again with Dr. Bill Wilson and Jim Fagerholt with Market County Grain. Thanks all.